Thank you for staying with us. And to give us an overview of what to expect from African markets in 2026, I have right here with me Etim Livino, Senior Research Analyst at Korea Asset Management Limited. Thank you so much for joining us today. All right, now beginning with equities, I would like you to give us an overview of, how the African markets performed in 2025 and your outlook, if we can do that together.
Well, I mean, that's a very interesting question, right? I mean, when you compare the performance of the African equities market and the global, economies, advanced economies as well, you realize that Africa did an average of 30%, right? And that was actually massive. I mean, if you compare with the advanced economies, the likes of, the US, UK, averaging somewhere around, 10, 12% levels. The bottom line is that you look at the African economy and you realize the stability that has come to play. I mean, so basically, if I'm going to answer that question, I'll peg it on macroeconomic stability. I mean, look at countries like Nigeria, the likes of South Africa, Kenya, and Ghana as well, recorded moderations in headline inflation, right? Nigeria as well, not too far off, 15.15%. Yeah, we've seen that trend from over 34% levels from, at the end of 2024. So the huge outliner here is, macroeconomic stability, coming in, and as well as improved demand in terms of sentiments from foreign investors or, of course, domestic investors as well. Speaking on foreign portfolio, participation, you look at the NGX and you realize, year to date as at the close of, 2025, we saw over 1.4, trillion in terms of inflows in that market. That clearly tells you that market has been, foreign investor, sentiments towards the Nigerian market. And I believe that's how it has been across the African market as well. So give or take, I expect same sentiments to play out, this year as well. So that's basically the driving factor.
All right, let's look at the Nigerian market. We saw what happened, especially if you look at it sectorally. We saw sectors that lagged. Oil and gas closed in the negative. But then you also had insurance, which picked up after the announcement of the raising of capital, recapitalization. So looking at these two sectors, let's begin with them. What do you see happening in 2026? And surprisingly, oil and gas is the best performing year to date.
Yeah, I mean, that's massive. I mean, doing over 36% year to date at this time. You look at that sector, it's actually a volatile sector. So, I mean, I'd want to be very cautiously, optimistic regarding my outlook for the oil and gas, sector, because it's largely hinged on, oil prices, the stability of global oil prices. And as I speak with you, I know last I checked, it was hovering around $69 per barrel. So, yeah, oil price movement, which is also a factor of geopolitical tensions here and there. So if tomorrow Trump wakes up and then, makes another, policy announcement which could, send oil prices upwards or downwards. Well, so for me, I see the oil and gas sector as a volatile sector.
So what should investors, how should they play in that particular sector?
I mean, they should actually look at, playing in the upstream, look at companies in the upstream sector, the likes of Aradel and Seplat, and try to, take positions in that regard. For insurance, I mean, there's been a lot of speculative plays in that market since they announced the recapitalization. But I believe, given the fact that we still have some timelines, I mean, the deadline should be July of this year. I believe some big names in that sector, to see improved demand from, from investors. And it's also important to know that the PENCOM, that's the, Pension Commission, recently came up with, some thresholds in terms of revising the thresholds for equity investments by PFAs upwards. And so more like you're beginning to see more institutional investors playing in that space. And I believe they'll look at the insurance sector, pick out the heavyweights in that sector as well. For oil and gas, I'm be too cautiously optimistic in that space as well, right? We can see, upward movement today and then something else happens tomorrow. But then it's still a good one, 36%, over 30-something% year to date. It's massive if you ask me.
All right, so do you mind saying a thing or two about consumer goods, industrial goods, and banking? Maybe one liner just for, those three sectors. What do you think?
Okay, well, for the consumer goods, I mean, we've seen some rebound in that space on the back of, FX stability. FX has largely been very stable, currently around 1,300 levels. So I believe, I mean, our outlook for us at Ankorea Research, we believe that the consumer goods sector would certainly perform, better than it did in previous years. And that's on the back of more, stability in our FX. Headline inflation is, moderating, giving consumers, more purchasing power, right? So yeah, I think it's a good one for the consumer goods sector at this time.
All right, so generally speaking, looking at the equities market, what do you see playing out in 2026, considering we are in pre-election year?
I mean, that conversation always strikes up, pre-election year.
Yeah.
Where you expect some, volatile movements to happen. But I expect investors to take a more, defensive approach in terms of selecting, the stocks. Look at defensive stocks, fundamentally, sound stocks to take a hold of. You look at 2026 and it started off on a roller coaster ride. The conversations around possible listings of the Dangote refinery, the Dangote fertilizer. I mean, these are all positive sentiments, driving the market at this time. So let's see how that plays out. But 2026 on a broader scale seems like a very good year for investors.
All right, sometimes when we say these things, we use technical words and we feel everybody understands. So when you say defensive stocks, what exactly are you referring to? I know you also talked about fundamentals, but I just want to pick out that defensive.
So for defensive, basically, it's still tied down to fundamentally sound stock, more like, sectors where, you're sure that their fundamentals, align with what they do in terms of how well is this sector insulated against, perhaps FX, fluctuations. Right, so an example would be the likes of the agricultural sector guys, like Wakomo and Presco. So you understand that the business model allows them to export, some of their produce, which more like also brings in, FX reserves. So, so those are the kind of defensive, conversations I'm having. And so at the end of the day, investors will be looking at, fundamentally sound stocks at this time to key into. Yeah.
All right, so which African markets are you banking on for value and growth?
I'm a Nigerian. Shouldn't I start with Nigeria?
Well, it depends on you.
Okay, like I said earlier, the African market has, performed really well in 2025. Nigeria did over 52%, year to date. The likes of Ghana as well, over 70, right? So, I still look at the sub-Saharan African countries, inclusive of Nigeria. I'm looking at, Kenya, Nigeria, Ghana as well, as well as South Africa, not ruling them out, to be, core countries, African countries to deliver in 2026 as well.
All right, so what will be your playbook for investors, whether they want to look outside Nigeria or just in Nigeria? I know you've said a couple of things, but, let's just have it together. Let's get our thoughts together.
Well, as an investor, you're not tied down to a particular country. At the end of the day, it's all about maximizing returns on your portfolio or investment. So, as a senior research analyst, what I would normally recommend is, if you see opportunities elsewhere, maybe Nigeria, maybe outside, right, you take advantage of them, right? As long as you're certain of the fundamentals of, that particular instrument that you're going into. So yeah, I won't relegate it to just, the Nigerian setting.
Okay, I thought you were going to mention some things, but it's fine. It's okay. Thank you so much for coming on the show today.
All right, thank you for having me as well.